Now, the summer melt-up for Wall Street is still in play. The US consumer remains resilient. Here to discuss that and how it'll impact the markets in the months ahead is the CIO of KraneShares, Brendan Ahern. Looks like there's nothing holding these markets back, and the US consumer just keeps spending.
Yeah, the U.S. equity market has been exceedingly resilient. I mean, it looks like we're headed to a little bit of a pullback just with NVIDIA and Micron off pre-market. But in general, yeah, you'd have to say U.S. as well as U.S. technology really just so resilient. I mean, despite some challenges, the market seems just to want to go up. And so yeah, you kind of almost got to get out of the way and participate.
Now, market's still looking at this at least 25 basis point rate cut in September, but that has been dialed back, of course, by a huge amount. Every time we speak, it seems that it's being dialed back even more. Are you on that camp, or are you in the camp where you're looking at maybe even none this year?
Yeah, I think there are some signs that this very resilient U.S. consumer, that there are some cracks showing. Just this morning, you have Walgreen Boots announcing pretty disastrous financial results, talking about closing stores. So I think there are some signs that there's a slight deterioration in the U.S. consumer, which means that potentially that September cut is certainly in play, and I think certainly markets are anticipating that sort of policy support. I think that's one of the linchpins for this market is the anticipation for interest rate cuts. At the same time, their rate cuts would be because the U.S. economy is weakening. And again, it's been quite resilient, though there are a few cracks showing.
And amid all this, we also have that growing tit-for-tat. This time, the EU versus China. However, it's broadening out, it seems. First it was EVs, then it became, the US, China saying that it was going to hit back at the EU because of pork and start this 1 year long pork dumping probe. And now the US side is saying that it's going to look into telecoms chips. Storm in a teacup or something wider?
Yeah, I mean, I think an element of the U.S. is just kind of political rhetoric. I would assume Chinese telecom providers have little to no business here in the United States, so it might make for a great headline, but I don't think there's any economic impact for Chinese telecom companies. And yeah, I mean, I certainly think the EU, China around electric vehicles. Obviously, auto manufacturing employs a lot of people, and auto manufacturing is very protected here in the United States. And I think you're seeing similar taking place in Europe about, those workers vote. And for any politician, that's going to be very critically important that you have that constituent backing you. So I think the EU particularly, and it's not really the EU, you're really seeing France and Spain and Italy, which have have large automakers, have very little exposure to China, are willing to push the anti-EV narrative, whereas Germany is actually going to come to the defense of China because Volkswagen has such a BMW, Porsche, huge presence in China. So Germany is actually going to be defending. So you're seeing a bit of this tit for tat. I think that some of this is just negotiating 101. But yeah, certainly shows that in general, corporations are getting along just fine with one another. The diplomats, not so much.
Now, this is a key point that you've highlighted to politicians, because it's not just any year, it's election year for many countries, including the US. Do you think to actually, the saber-rattling might actually become something more of a reality? And are we actually going to see any of these tariffs be put to work?
I think we have to, as investors, you have to really distinguish between the rhetoric and the reality. And the reality is China is a very important economy. If China is doing well, that's a good sign for the global economy. China has very strong relationships with the United States from an economic perspective with the EU. So at the same time, some of this anti-China rhetoric does play well in the polls. And so, again, I think we have to distinguish that things like 60% tariffs. If you think there's going to be 60% tariffs on Chinese goods, you should be shorting Amazon, Amazon, Costco, Home Depot, it would just be a disaster for the U.S. economy. So that's nothing more than a negotiating tactic. It plays well with a core audience. Is it going to be economic reality? I certainly don't think so.
And last but not least, I always ask all of my US guests this question. Mood on the ground at the moment ahead of the US elections?
Well, I think in general, people, there's this is what it is. I mean, these are the two candidates, and as much as we might hope or wish that there were alternatives, there are not. So I think ultimately the two candidates, they're not dissimilar in many ways. They're both kind of big government. So yeah, it's kind of an interesting situation where I think most people wish there were other alternatives, but this is the reality.
Thanks very much, Brendan. We'll get you on definitely soon ahead of those elections. Brendan Ahern, CIO of KraneShares there from New York.